SCHD rules. There's really no argument about that. It's one of the biggest, if not the biggest, dividend ETF going today. But what if I told you there's another dividend ETF in my portfolio that's beating SCHD, and I don't think that makes SCHD a bad investment? In fact, I think it makes this ETF one of the best complements to SCHD. And there's a very specific reason why. This is SCHD on Seeking Alpha. You can see it's trading at $34.43. It's had a great year since everybody's been pulling back from tech. You can see it is huge. The funds under management are $108.74 billion. Here's the dividends page. As you can see here, the dividend yield is not fantastic. It's 3.04% currently, with an annual payout of $1.05, and your 5-year dividend growth rate is 7.53, and the dividend growth has been going on for 14 years. And now I'm going to take you to my Snowball Analytics holdings. Now, welcome back to the Daily Dividend Builder. If you've been following this channel, you already know that I'm a big believer in giving every dollar a job. And SCHD absolutely has a job in my portfolio. But today we're talking about FDVV, the Fidelity High Dividend ETF. Now I'm going to show you what it's doing in my portfolio. Now, I see something SCHD doesn't give me nearly as much of: technology. Now, FDVV basically has the lower yielding tech that SCHD does not hold, and that difference matters. Now, this is my total profit in my portfolio on Snowball Analytics. As you can see there, Fidelity, the high dividend ETF, is number 2. SCHD is number 3. Substantial difference, because you could see there that my total profit, I have a 42.42% total profit. If you look at the percentages, right now, Fidelity, the FDVV ETF, is now 5th, and you can see SCHD is trailing with 30.12%. Now let's start with the serious question. Why even mess with SCHD? SCHD has built an incredible reputation among dividend investors. It focuses on quality companies, dividend sustainability, and dividend growth. And that's exactly why I hold it. But here's where things get interesting. If you build an ETF around these characteristics, you're naturally going to get certain sectors and companies represented more heavily than others. And technology is where I think the gap becomes especially interesting. A lot of the big technology companies don't fit the traditional high dividend profile. That may have relatively low yields today, but they have something else: dividend growth. And that's where FDV enters the picture. FDVV gives me exposure to the companies that can complement what SCHD is already doing. I'm not buying FDVV because I think SCHD suddenly forgot how to invest. I'm buying it because I don't want every ETF in my portfolio doing the exact same thing. Think about it this way. If SCHD is one of the foundations of my dividend portfolio, FDVV can help fill in some of the spaces around that foundation. One of those spaces is technology. Let's go back to Seeking Alpha, and let's pull up FDVV. These are the top holdings in FDVV. As you can see there, there's all your tech: NVIDIA, Apple, Microsoft, Broadcom, and then there's the others sprinkled into financials like JP Morgan Chase, Dell, Bank of America, Coca-Cola, Alphabet, just the well-known, reliable companies. Now, this is all important to me because I want today's income, but I also want tomorrow's income to have a chance to grow. And some of these lower yielding technology companies have the potential to contribute to that growth over time. Now let's go over to FDVV's dividends. Now it is a lower yield. Right now it's currently yielding 2.69 with an annual payout that's higher than SCHD at $1.73. But look at that 5-year dividend growth rate, 11.29, which means you're getting yourself an 11% raise yearly with FDVV, where it's about 8% when it comes to SCHD. And here's the part that really caught my attention. FDV is currently outperforming SCHD. Now, before anybody starts typing, no, that does not mean FDVV, easy for me to say, is better than SCHD. One portfolio's performance doesn't prove one ETF is universally better than another. And I'm not trying to make that argument. What I'm saying is something much simpler. FDVV has earned its place alongside SCHD in my portfolio because I don't want every holding to win the same race. I need my holdings to perform different jobs. SCHD gives me one type of dividend exposure. FDV gives me another. And together, I think that can be more interesting than simply picking one and ignoring the other. Now, if you like the idea of building a dividend portfolio $1 at a time without pretending there's one perfect ETF for everybody, hit that subscribe button because that's what we're doing here. What do you have in your portfolio? What do you have? Is there anything there that is beating SCHD? Let me know in the comments. Now, we're not trying to find the magic investment. We're trying to figure out how to give every dollar a job. And if you're already subscribed, thank you. Now, let's get back to the FDVV versus SCHD question. Now, here's what I think gets lost when people compare ETFs. We tend to ask which one is better. And maybe that's the wrong question. Maybe the better question is, what does this ETF add that I don't already have? That's how I look at FDVV. Because if I already own SCHD, I don't necessarily need another ETF that gives me a slightly different version of the exact same exposure. I'd rather find something that fits a whole. And for me, FDVV's exposure to lower yielding technology companies helps do exactly that. Maybe it creates one super ETF where both of them combined cover the holes that the other one does not. Now, these companies might not give me the biggest dividend today, but today's yield isn't the only thing that matters. If a company can grow its dividend substantially over time, that lower starting yield could look very different years down the road. That's the part of dividend investing that gets overlooked. So when somebody says SCHD rules, my answer is absolutely, but not so fast, because SCHD doesn't have to lose for FDVV to win, and FDVV doesn't have to replace SCHD to be valuable. That's the entire point. I don't want my portfolio to be a boxing match where one ETF knocks the other one out. I want it to be a team. SCHD can do what SCHD does. FDVV can do what FDVV does. And I'm perfectly happy letting them both have a job. And honestly, I think there's a bigger lesson here. Sometimes investors spend way too much time looking for the best investment. And if you're building a portfolio for years or even decades, maybe the better question is, what's missing? Because the best ETF in isolation might not be the best ETF for your portfolio. That's an important distinction. And it's one of the reasons I don't look at FDVV and SCHD as enemies. I look at them as two pieces of the same puzzle. And that brings me to something I'm going to talk about in my next video, because there's another part of investing that doesn't get discussed nearly enough. What happens when you start late? I started late. I didn't start investing until my mid-50s, and now I'm basically just 4 years into my investing journey. So it's easy to tell everybody, just give it time. Time in the market is your friend. Start early and let compounding do the job. And that's great advice if you started early. But what if you didn't? What if you look at the calendar and realize you don't have 30 or 40 years anymore? That's where things get a lot more complicated. And that's exactly what I'm going to tackle in the next video, starting late and trying to make up for lost time. So if you're in that position, you're definitely going to want to see that one. So does FDVV beat SCHD in my portfolio right now? Yes. Does that mean FDVV is better than SCHD? No. It means that FDVV brings something to the table that complements what SCHD already does, and that's ultimately what I'm looking for. Not the perfect ETF, not the magic investment, just another dollar with another job. If you get value from this video, hit like, subscribe, comment. Let me know what you think. Let me know if there's something else you'd like me to cover, and I'll see you in the next one. And if you're wondering whether you can ever just invest and chill, I got a video for that right here. See you in the next one.